all, good afternoon. You're watching Closing Trades on 80 Now. I'm Anisha Jain. With me is Aisha Faridi. It's a good momentum in the markets right now, but more importantly, there's a national headline that we need to track, and that is what is happening in Uttarakhand. It does look like there's a breakthrough as far as that tunnel crisis is concerned. Remember, 41 workers have been stuck for almost 16 to 17 days now, and now we are at just those some last meters, and hopefully, Aisha, prayers for the 41 people trapped inside, but hopefully they should come out today.
Yeah, considering, the main rescue plan has suffered quite a bit of delays. And like you rightly pointed out, that the rescue operations have been on for a good 17 days to date. 41 workers have been trapped inside the tunnel in Uttarakhand state after the main rescue plan suffered a major delay. So it seems like just a few minutes and we should have those trapped workers out. What we're gathering right now from our network sources is that many doctors and ambulances are already on the sites, and so are some authorities as well to get those rescued workers immediate aid, and we should be getting those live visuals just very shortly from now. But what you're seeing on your screens itself are the live visuals that are picking up right now from the Uttarkashi tunnel rescue, wherein a breakthrough has finally been reached after a good 17 days. But back to the markets. 19,872 expiry to deal with this week. Adani names are the ones which are really hogging all the limelight. Adani Enterprises, it's a 10% move. I don't recall the last time you had that stock sit on a double-digit move. In fact, not just Adani Enterprises, rest of the Adani Group stocks as well are holding out very, very smartly in trade. Adani Ports, Adani Green, the entire gamut is looking very, very smart indeed. As are a couple of OMCs as well, which have been holding out very, very smartly from the word go today. Of course, there are a couple of brokerage upgrades as well. HSBC, for instance, has upgraded HPBP IOC to a buy from the earlier hold, significantly up the target prices as well. Also, mining companies, they too are in focus. It seems that the ministry is going to start auction of critical strategic minerals from November 29th, this week itself. So you've got the likes of NMDC, JMDC, both those stocks are holding up very, very smartly in trade. We've been flagging off BSE and that massive upgrade or rather coverage which has come in from the House of Jeffries, wherein they are pegging a 24% upside in the stock to the current market price as well. So that's really keeping this stock afloat. And IIFL continues to maintain a buy on MCX. We've all seen how this one has been a big mover. In fact, they've upgraded the FY25-26 EPS now further to a good 20 to 25%. So that's one stock which has been holding out very well indeed as well. But for the Nifty, it's really OMCs, Adani Group names, and then Tata Motors along with its DVR, which has already managed to hit a life high for itself. They're the ones which are really chugging along very, very nicely in trade. Good time then to bring on board our experts and figure out where the market is going to move from here. Kunal, Naresh join in on the show. We've got Daljit Singh Kohli as well joining in right now. Kunal, hi, afternoon. First, a word on the index. It's been a very tempered sort of day. Now you're finally seeing a bit of a lift off. Where do you think the expiry is going to close in on?
Well, yeah, I think it looks attractive that the markets are trying to the indices are making a comeback for itself. But the tone for the markets over the last so many weeks has been that the mid caps and small caps have managed to outshine, outclass as well as outperform the larger cap names, specifically the front weighted or the higher weighted index stocks. But I think now it could probably be a time that the indices are showing signs of a breakout, specifically Bank Nifty heading towards a possible break of that 44,000 mark on the spot levels. The Nifty is also inching closer to that 19,875, which has been the high for the index over the last 2 weeks, and that was acting as a resistance of sorts. I think we are just 10 points, 12 points away from that breakout on the Nifty on the spot level. So I would probably expect momentum coming back into the indices. But again, I think this could just maybe add further boost to the market sentiment. It's not as that the large caps, when they start to participate, we may expect cool off in the mid caps and small caps. I believe that the trend would continue. It's just that the large caps, which have been maybe late in terms of participating on the upside, they could also chug along quite well.
Okay, point taken. So there's a bit of breakout which we can witness as far as the Nifty goes. But Naresh, what's your thought on the market? It's a crucial week, as we were pointing out. A lot of important data points lined up, both in terms of macros as well as micros. Ahead of that, what's the expectation at the index level and what should the trade be?
So on the index level, the bias is positive, expecting a test of 20,000, 20,200. Even today, the markets have done well, but we are not seeing contribution come from the heavyweights. So out of the 70, 80 points move on the Nifty, 25 has been contributed by the Adani group itself. And then we look at HDFC Bank, Reliance still in the negative for the day. So we may eventually see some build up towards the upside in the heavyweights, and that could take us to 20,000, 20,200. Sustaining about 19,800 is a positive. So as of now, the trend is up, but we are seeing more contributions from the side of the, not from the heavyweights, but from everything else in the index.
Kunal, Tata Motors, 694 in the futures now. Where next?
Yeah, I think we'll hopefully look out for 700 as a breakout for Tata Motors. But I think this is a major breakout which you are looking out for the stock in terms of the previous highs. Now, I think 2015-16 high for Tata Motors was around 598, 600 approximately. And ideally, we tend to look out for at least a 20 to 25% upside for the stock post such kind of breakout. So, which means we could be looking at least 750 as a near-term target for Tata Motors. What I also like is that many of the other two-wheeler stocks, for example, Hero MotoCorp has made a very good comeback. M&M is also trying to get into a recovery from the 1550 levels. Maruti has been looking quite okay and robust about the 10,000 plus mark. So we are now, for example, start of this year, we just had maybe a couple of options from the auto pack, which looks attractive, M&M and Tata Motors. But right now, I think there are a lot many better options on the, on the auto pack, which are also trying to make a comeback for themselves.
Okay, point taken. So those were some of the stock which were buzzing around in the trading session. But let's move on and take a look at some of the other big buzzes as well. Well, on the gaining side, of course, it's the Adani group of companies that is taking the limelight. And take a look at the move on the Nifty there. It's now very close to that 19,900 mark. A lot of stocks which are actually buzzing around on account of news flow plus the momentum as well. For instance, you have on the gaining side names coming in from the metals basket. So Adani Enterprises features on that list. Coal India is another stock. You also have BPCL, which is doing quite well. And then Tata Motors is also inching higher. Nifty Bank too has managed to perk up a bit. So PNB, Bandhan Bank, Bank of Baroda, these are your top movers. From the broader markets, New India Assurance, that continues its big run, and even GIC for that matter. And if you look at the last 1 week itself, both of these counters have seen massive gains build up. Naresh, what's your take on these two counters from the insurance pack, New India Assurance as well as GIC?
So time to take some profits off on these names. Got to remember, there are again stocks which do not have very high institutional ownership. A little bit of a lower float side of it. The stocks have moved up almost 40% in the last, say, 3 to 4 sessions. And the stocks do have a tendency to go sideways after such a move. We've seen multiple times the stock has moved up and then consolidated. So for now, after this move, one should be a little more cautious on this, both these names as such.
Daljit Singh Kohli is also with us on the show. Daljit, your view on the Adani Group?
Good afternoon. We cannot speak specific to any stocks or any group, but I think we all know what is the news flow there, no? That Supreme Court has given some positive comments on that. And many of the investors were waiting for hearing those kind of comments. I think it's the reaction of that. And they have launched some hydrogen plant also. That news flow is also moving around. So it's probably that news flow which is working in their favor. We have no exposure to the group at all in our portfolio, and we don't intend to do also.
Okay, that's the take coming in on Adani group of names. What's actually holding back the index today is Reliance. That's down about 0.6%. Of course, IT has been a laggard, and so is the case today with the TCS Infy. In fact, some of the mid-cap IT names which are getting clobbered more. L&T, ITC have all been non-performers, as has been the case with an HDFC Bank, which is mildly soft, Kotak, which is absolutely flat, and Hindustan Bank also, which is not doing anything. Naresh, just a word on the Nifty Bank particularly, because again, you're seeing some of the private banking names not really participate in the move today.
That continues to be a concern for the whole banking index as such. When you have the top two weights not really making much of a move. So if you look at an HDFC Bank, the stock is struggling to cross the last 2-3 month highs, which is closer to that 1550 mark. Once that crosses, that would be the first indication of a trend change. Because before this fall, 1550 was a support wherein it would actually bounce back from. So that would be the first indication. Then you have the earlier outperformer, which was ICICI Bank, which is also again holding on to the 900, 920 mark, but not making a move beyond 950. So once we start seeing some bit of a follow-up action on these names, then the Bank Nifty move could accelerate. But at the same time, the other leaders like Axis Bank has made a strong recovery. You have a stronger recovery in IndusInd Bank, which has not corrected much. So the heavyweights continue to be problem in the Bank Nifty, but we are getting the first signs, at least they've started bottoming out or finding supports at the lows in the last few days.
Okay, some of the defense names as well, of course, led by Hindustan Aeronautics are the ones which are in focus. Remember, over the weekend, you got the news flow that India is set to begin its ambitious defense projects worth about almost 1.4 lakh crore rupees. And that continues to augur well for some of these defense names. But Daljit, a lot of debate out in the market for, the defense pack, whether the meat of the move is already behind us or not. What do you think about how defense names should be looked at?
Well, that is true that a lot of movement has already happened. So if somebody wants to join the party now, I think it will be too late because most of these stocks are factoring in big growth for next 3-5 years. Of course, numbers will come over a period of time, and defense projects are not very short-lived. They are very long gestation period projects. Or government may have intentions of spending 1.5 lakh crores, but it will not be done in one go. And it won't be happening in just a year. It will be a process of 4 or 5 years. So what we are paying for these stocks today, if we are factoring in next 4 or 5 years of growth and giving them a multiple of 60, 70 times, then obviously we have factored all of that positive things. So I guess those who are holding, they don't have to do anything. They just have to continue with it. But if somebody is looking to buy for a fresh thing, then it will be too late now.
Okay, we'll take a very quick break on that note. But as we do that, must mark out the Adani group of stocks, which have had a stellar run through throughout the day. The flagship company, of course, Adani Enterprises, like we flagged off, is up double digits. The likes of Adani Total Gas, Adani Energy Solutions are up anywhere between about 20% or so. Cumulatively, of course, the stocks have managed to add about $15 billion in market cap. The move follows after India's top court reserved its order to probe companies based on the Hindenburg report with respect to fraud and stock manipulation. And you can see those stocks hold out very, very smartly indeed. On that note, we'll take a very quick break. Back with the market, or rather closing trades right here in ET now. Still holding out okay for the index. We're still sitting at the session highs, in fact getting closer to that 19,900 print. And this despite performance really from some of the large heavies like an ICICI Bank, Reliance Industries. In fact, they're at the lowest point in the session, down about almost 0.6%. L&T has not done anything. HDFC Bank, Kotak, IndusInd Bank, some of the auto majors like Maruti, M&M, they're not participating in today's move. So index is doing up thanks to the Adani Group names, and some of the oil and gas names are the ones which are really powering ahead. Even ONGC for that matter, that's holding up nearly about 2%. So that's looking extremely good. Tata Motors, of course, has been very strong. There's Coal India looking smart. Axis Bank amongst the private banking names is looking smart indeed. There's SBI, which is holding up 1% or so too. Kunal, within the banking pack, you think this diversification, although HDFC Bank also has sort of begun to participate, but still, got loads to catch up from the likes of an Axis, IndusInd, or for that matter, an SBI, etc. You think this gap will remain with Kotak, HDFC Bank on one side and the others on the other? Yeah,
I think for most part of the rally, at least hopefully going forward, the gap would remain and persist because there's no major buying or change in pattern in terms of the volumes for many of these stocks. Now, we ideally look out for the first sign, which is a short covering sign. Now, since most of these stocks are in the F&O and large cap names, when you see 3 months, 4 months of underperformance, it generally becomes more like candidates where short sellers, they tend to use lot of strategies to develop more positions into these names, and the stock remains into a range more or less with a negative or a downward bias, like what we've seen for SBI, we've seen for HDFC Bank, and we've also seen for Kotak Bank, and I think to a larger extent the likes of Axis Bank, etc. Now, when we see the first sign of rally for these stocks, and if it's led by a good amount of short covering, that's the first sign where the stock tries to change trend for itself. And that's where I think we need to catch the moves for these stocks. So as of now, what we've seen a very gradual recovery for the stock. Hopefully, if the rollovers for these stocks also, even if that drops down, that could probably indicate that maybe short rollovers have not carried forward the positions for these stocks. So we'll need to see those signs emerging, for these large cap names to go into a much more stronger expectation that these stocks would probably play a catch up. But till the time those signs are not there, I believe that the underperformance would continue.
Sure, underperformance might continue in some of these names, but Daljit, what's your view on the power sector, and like after the run-up of the power financiers, what is the best way to play, do you believe?
So we are very positive on power sector, and we are holding one of the India's largest power producer in our portfolio. And also we are holding one of the transmission companies, which again is a PSU. We believe that there is a lot of potential in both these companies. See, best way to play power right now is there is a fad on renewable basically. No, but then what is the price you are paying? That valuation may not be very comfortable for investors like us who are looking for value buy. So for us, the better way to look at is the transmission and distribution companies, where we see there is a lot of investment has to go in because we are underinvested in that part. Generation, we have done a lot of investment, but transmission and distribution as a country, we have not done enough investment there. So there's a lot more to go there. And of course, the power financiers are direct beneficiary of any investments. Government has made a lot of changes in the policies where all these SEBs are now forced to pay. So which is again a very good thing for all these power producers, because earlier all that money was getting stuck at the SEB levels, state electricity boards. Now all because of by force they are supposed to pay. So that will come back to these generators and transmission companies, which is a very good thing and a long-term structural positive. So that's why we have two companies in our portfolio.
Daljit, but what about IREDA? That's going to list tomorrow, and if you go by what the market suggestion is, it might open at quite a bit of premium as well. What should one do if you've got the allotment? Should you just book profits? And secondly, if you've not got the allotment, should you still buy at higher levels tomorrow?
The difference is only the difference is valuation part. Between the existing financiers and this new finance company, right? They are available at 1.5 times, and this one was available at 1.1 time. Now, if the listing gains itself make it 30-40% upwards, then that gap narrows down. So it doesn't leave too much scope further from here. From here onwards, it will be, it's like earlier you had only 2 options, now you have a 3rd option. So if somebody is adding a fresh position in power finances, he has out of the 3 to choose instead of 2. That's the only difference. Otherwise, all 3 of them will be the similar. So we would like to go with the existing ones because they are already, they're proven, they're merit, they are already doing. And in fact, the other 2, one is the subsidiary of the other. So REC and PSU. Basically, one is the subsidiary of the other. So if you buy one, you are actually getting both of them. So it's basically the tactical call the fund manager will have to decide. But otherwise, as a sector one, it's very good. Valuation gap, I think with this listing gains will go away. So it won't leave too much scope for you.
Okay, that's the take coming in on IREDA. Of course, there's much excitement around Tata Technologies listing as well. The official date, of course, is still not out. But that said, it's the primary markets which are off late hogging all the limelight. That reminds me, let's also check in on what Honasa Consumer as well is up to. Well, the management categorically denied to us as well that, there is no ESOP selling or block happening in the stock. But the stock has been under pressure from the word go. It cracked down about 4% to start off trade and still reeling under pressure. In fact, it's only worsened from there. About a 6% cut is what you're seeing on Honasa. Remember, there were reports indicating that perhaps a chunk of employees may be looking to sell their ESOPs, the quantum being 5 to 7% odd. That's keeping Honasa still pretty much under pressure as we speak right now, irrespective of the management clarification. What continues to hold out is the OMCs. So HP, BPIOC looking good. There's ONGC as well, which is holding out well, a good 2% move coming in here. Naresh, let's have a look at the charts. ONGC, HP, BP.
So all these 3-4 names, first going with OMCs, they've given a multi-month breakout. So BPCL for the last almost 12 to 18 months, every time it came closer to 400, it took a knockoff. We saw a correction in June, July also from 400 back to 330. We've broken that levels of 400. And now the trend has started wherein it could slowly and steadily have a target price of 480. So that looks promising. Same is the case with HPCL. Then if you look at IOC, that's hit almost a 5-year high now. The stock was back at 100 only in 2019. So that's a strong breakout as well. So these 3 names become a buy on dips. Then when we go to ONGC, although not exactly the same sector, but the stock was last at 190, 200 levels in 2018. It was at 190 when Russia-Ukraine crisis hit the markets and crude was at $135. So that's the price point it is trying to break. So that's like a 3 to 5 year breakout as well. So all these names remain a buy on dips. As of now, there has been a little bit of a rally, but buy on dips and hold at current levels, maybe can buy a partial position also.
Point taken. So that's the latest coming in on some of these oil marketing companies. But the other space which is buzzing is mining as well. So you have names like Coal India doing well. Of course, there's GMDC which is holding up okay, and a couple of these other names from the entire mining vertical is also something to watch out for. Naresh, your view on some of these?
So out of that, NMDC looks the most interesting because that has been a slow and steady trend right from the time it broke out about 115, 120 levels. Today also the stock has crossed the last 2-week highs, which were made around this 178 mark. So a slow and steady rally, the stock is coming back to 2022 levels. And overall iron ore prices have also been on an uptick. So NMDC looks interesting. Apart from that, GMDC, OMDC are more speculative in nature in terms of the expectation of mines, etc. going around. The risky bet in this sector could next be Hindustan Copper, which has been sideways and consolidating after that move from 125 to 170. The stock last time saw a big spike in 2021 towards this 175 to 185 mark. So eventually, maybe this could be the one which is a risky bet which can do well, but NMDC remains the top bet.
Okay, that's the take coming in on some of those mining stocks. What's also holding out well and has been hitting a record high in today has been MCX. That stock on last count was up a good 7%. Of course, they've rolled out a public announcement and announced the appointment of a new MD and CEO. But that aside, we should just bring out the 3-month chart on MCX. It's been quite the mover. And the big move in MCX, I think, has happened only in the last 1 month or so. If we can just bring out the MTD chart too. There you go. In the last 3 months, it's a 91% move. And the bunch of the rally has only happened in the last 1 month or so. Kunal, what do you see on the charts for MCX? Can one still buy into it?
Well, not really, but I think, yeah, for someone who's bought, I think it's a good time to still hold on to the stock because, you know, what I actually see on the charts is that there is no major correction the stock has shown from this move from 1400 to 3000 plus where the stock has crossed today. So even though I think there was a correction maybe start of the month of November, it was just to the tune of 3%, 4% for the stock, and I think it had corrected from 2600 to 2500 in a matter of, I think, one to two trading sessions. But from there on, the stock has just moved up higher. So when you see such kind of an phase where the momentum is extremely high and no phase of correction coming back into the stock price, entering those stocks may become a bit more tricky. So you'll have to be a bit more patient for someone who's missed out and wait out for that odd phase of correction. In case if it corrects by a 10% kind of a margin, that could be a good point to start entering into the stock as well as looking to buy on dips.
Okay, so don't be in a hurry to get into the stock of MCX, but let's take the closing trade ideas from our chartists as well. Naresh, you go first.
So like Tata Power, which has seen a big price volume breakout today, the stock has come back very close to the highs of the last 2 years. So looks like a fresh breakout which should continue towards an all-time high.
What about your closing trade ideas?
That'll be a buy on NMDC. Looks very attractive as a chart. Stock breaking past about 180 levels also. So that generally puts the stock into a multi-month breakout. Looks attractive in terms of momentum. Would look to buy.
Okay, point taken. Time now to slip into a very short break, but as we do that, listen into the latest commentary coming in on how India is standing tall amongst other emerging market players.
There is general sense that India stands quite strong in the broader EM pack, and the growth story for India is quite strong, and so quite optimistic across corporates, across the 11-12 markets we cover in the region. Japan and India are the only markets that have got inflows, and China obviously had got outflows as well. So there is definitely that rotation that has been going on between money leaving sort of China and other parts of the region and going into Japan and India. In general, I think the way markets are looking at it, I think the base case is that of policy continuity. What we can do on our side is look at what has happened historically, and I think one pattern that has been very clear is that market tends to be strong heading into the elections in general.
So elections are going to be critical because we think that one of the key drivers for India growth story that we are forecasting to be quite healthy at 6.5%. Is that improvement in private investment. We've seen a nice pickup in the investment to GDP trajectory. And so that trajectory will need a stable government at the center. India's story has been there independently of China. And so in that sense, investors are looking at India more independently.
Welcome back. Well, a decent momentum off the highest point of the trading session, but nonetheless comfortably above 19,850. Deepak Shenoy also joins us on the show. Deepak, let's begin by discussing Honasa if we can, because the stock saw a solid surge in the week gone by post its earnings. Today, of course, it's reacting to that entire report of perhaps some ESOP shares coming and adding to the supply pressure. But overall, fundamentally, how would you look at this company?
So, we don't have an investment here, but, the results which came in, I think they had a profit of 29 crores. Their cash flow was quite decent for the first 6 months of the year, positive, and I think higher than the profits in the first 6 months. So in the sense that they're actually cash flow positive in that sense. But there is this overhang of sales that are likely to come. Now, of course, we talked about ESOP holders. I think the companies denied the news, but there's been news of the ESOP holders that will convert their shares, and employees are allowed to sell. They don't have a lock-in period after their ESOPs are exercised. So they can sell their shares whenever they want. So if they choose to, they will add to the liquidity of Honasa shares in the market. Currently, that liquidity is very less. I think there was a relatively small amount of percentage of the company that was made public at the time, and the lock-ins start opening a month after the IPO for QIP investors in the qualified institutional buyers, and then after 6 months for pre-IPO holders who want to sell. So there will be some liquidity of shares that will come into the market that should typically hold prices down from where they're going. While the fundamentals have been decent for a quarter, I think given this liquidity issue, it may be wise to wait for a bit more to see how the company performs over time, and whether this is just something that is because they've just turned out from the red to the green only this year. So we want to see if that sustains longer. Though their first quarter actual results have actually been good. The first, as in the Q2 for 2023-24, that has been quite decent overall.
Yeah, it has. Just looking at the move on an MCX, BSE, they're all names which are, holding out just very, very smartly. In fact, Deepak, just wanted to understand your own thoughts on BSE. Of course, there's a Jefferies note, and they're saying that it could be a 24% upside. At least that's what they're attaching to the stock, even after the current move that we've had in the stock. You think that's possible?
To be fair, Aisha, we hold the stock, so quite biased here. The reason I think things have moved for BSE is because they were already profitable before the options changes. So what's happened is there are these day to expiry options. That means options expiring today or tomorrow. I mean, 1 day to expiry or 0 day to expiry options. They are very, very popular both in the West, in the US, and now in India as well. And the two exchanges have conveniently broken down the week for option traders to be able to have 0 DT options every day. On Tuesday, Wednesday, and Thursday is the NSE's expiries, the Fin Nifty, the Bank Nifty and the Nifty. And on Friday and on Monday, there's the Sensex and then the Bank X from the BSE. So effectively 40% of this crazy rush to deal with daily 1 day to expiry or 0 day to expiry options has been captured by the BSE in some way, not 40%. Right now it's about 11% with the scope to go up further here. And these, given the increase in volume here, and it is absolutely out of the park compared to anything else. Stocks, whether it is stocks delivery or even futures trading, options trading has gone through the roof. So BSE stands to gain because of two things. First, it reduced the price fees quite substantially to get some market share, and now they've gone back to the increasing of the fees. So that will be visible in this quarter. Another thing that happens for BSE is the upstreaming of all cash that is held by brokers, customers to exchange level, to the clearing agencies of the exchanges themselves. So the float income will now be earned by the at the exchange level rather than by each broker, unless some brokers get optimized and then are able to do fixed deposits. So I think that this other income stream will also come in and kind of increase the fundamentals quite substantially. So while the stock has gone up 2x, I also believe there is a little more scope here, but it's a very, very rough stock. It's going to both surprise on the upside and the downside. So I wouldn't recommend it for the faint-hearted at this point. It is more a momentum stock. It's there in our momentum portfolio as well. But I think the fundamentals have taken a trigger change at this point.
Deepak, is there any other underappreciated, undervalued theme in the market right now? I mean, after the run-up, we do call it, catch-up trade, whether it was insurance or even some of these financialization theme names. And OMCs are too catching up now. But is there anything else that you would call as undervalued right now?
I might sound like a broken record on this, but I still think LIC is an unrecognized play in this entire space. They're probably on the road to en route to making more than 42,000 crores of profits in this quarter. And then we will see this. This is about a 400,000 odd crore in terms of market cap as a stock. So you're actually paying 10 times earnings, and then the earnings will actually increase because LIC's share from their participating policies goes up from 7.5% this year to 10% next year. There is also some one-timers which are in the form of pension liabilities, which will go away over time, over the next few years. Those are accounted for in their accounts today. And of course, they continue to retain market share, increase something called their non-participating policy share, which used to be only 5 or 6%. Now it's reached 10. They wanted to get to 25%. So I think underappreciated as a stock, mostly because the nature of it is a public sector company, and then the accounts have only recently converted from a corporation to a limited liability company. So there, I think there is a lot of scope there. Again, we're fully invested, so very biased on that front. But I think there's a lot more to come there.
That's quite interesting. In fact, since we're on the subject of LIC, what we understand is from our sources that they're going to be launching, that's LIC, will be launching a guaranteed 10% return product, and this launch is going to happen as soon as this week itself. In fact, we've learned from our sources that the buyer is going to be getting a guaranteed 10% of the sum assured for the rest of his life. Anurag Shah, my colleague, is here with more details.
So LIC is launching a 10% guaranteed return product, and as per our sources, this product will be launched this week only, probably tomorrow or day after tomorrow. This product will be launched, and in this product, LIC will give a guarantee of 10% of return, 10% of the sum assured from the vesting date. So the policyholder has to choose a vesting date, and after that, 10% per year return will be of the sum assured will be given till the time rest of the life, till the time the policyholder is alive. So this LIC is hoping this will be a game changer product, and this will be a guaranteed non-par product, as LIC is focusing to increase their non-par market share and now they stand at the 10% of overall their premium from non-par products, and they are hoping to increase it to 15%. So this product will be in that line only. And as per our sources, in this fiscal, means from December to March, LIC will be launching 4 more new products, and focus will be completely on the non-par product. From these products, LIC will be increasing their new business premium growth. So as per experts also, they are believing this will be a big development as far as LIC is concerned, where they will be launching 10% guaranteed return product.
Okay, thanks Anurag for putting that into perspective. But the other space, Deepak, is the entire two-wheeler and in fact the auto space as a whole. We'll get the auto sales data for the month of November very soon. And if you go by the initial response to the festive season, it's been quite good. In fact, we were speaking with the FADA representative earlier in the day, and they were quite excited by not only the offtake of the premium bikes, but even the mass segment they said is picking up. Would you A, concur with the view, and secondly on the valuations, how do you think these companies stack up?
Sorry, I couldn't hear the name of the companies.
It's about the two-wheeler space as a whole.
Yeah, two-wheeler. I think this is an interesting year for two-wheelers. While we don't have any, we're looking at it carefully. The trigger really is elections, because what the elections do, kind of Robin Hood style, is transfer money from the urban areas to a lot of the rural areas. And the rural hasn't really recovered post-COVID. And I think if the buying power in the rural areas increases, you're going to see a return of the two-wheeler purchasing cycle, which I think has been in a lull for a long time. We're seeing numbers starting to improve, but I don't think we've reached, for instance, Hero MotoCorp hasn't still reached the 7 lakh bikes per month that they reached, I think, in 2018. So it's been a long time since then. And some of the the problems have been increase in cost due to longer term insurance that you have to buy as soon as you buy the vehicle and so on. But it's also been 5 years since that judgment. So I think to that extent, there is a recovery potentially inside. If elections, actually the spending on elections allows this, the cycle to kind of revive, I really think all the 3 large two-wheeler companies and then, iShares from, which is relatively more niche, I think all of them will see some kind of uptick in terms of sales. The stock prices have already started to go up. So maybe people know much more than what I am talking about. So it's possible that, that's, already started to be factored in a little bit, at least into the price. But I think the fundamentals, at least when the data starts looking better, is when we will be more closely analyzing this space.
Okay, since we're talking about two-wheelers, Royal Enfield kicked off a whole slew of bike launches across companies with its new Himalayan 450. Let me take it across to Srishti and find out more details on the same.
We have seen great launches from the two-wheeler segment from the likes of Triumph, Harley, etc. They have done pretty well in terms of the successful launches for 2023. But let's talk about the current launch and some of the most awaited upcoming launches in the two-wheeler category. Royal Enfield is in focus as the company has launched the new Himalayan 450, and that's the introductory price of 2.7 lakhs. And this is actually higher than what the company was already offering, where Nomura highlights that the pricing is 25% higher. This is a premium bike category what Royal Enfield is coming up with, but Nomura believes that the sales will even go higher from a current rate of 3,000 units per month sales that will inch up to 4,000 units per month of sales, because the new Himalayan is seeing a significant upgrade. The reviews of the bike are very strong, and that's what Nomura is highlighting. So Eicher Motors is definitely in focus on the back of the recent launch, but not just that. In the times ahead, we're going to be having interesting launches from the likes of Bajaj, Hero MotoCorp, as well as Royal Enfield in focus. Firstly, let's have a look at what's lined up from the likes of KTM, Yamaha, as well as Bajaj Pulsar. We are waiting the launches in the range of 1.7 to goes higher to 4 lakhs in the month of December itself. Key to watch will be Bajaj Pulsar 400. That's expected price range of 2 to 2.1 lakhs. But going ahead in 2024, we're going to be having a slew of launches lined up from the likes of Royal Enfield specifically, because Royal Enfield Shotgun 650, that's expected to have a launch in the month of January itself. And going ahead in the month of March, Royal Enfield Roadster 450 as well as Royal Enfield Classic 350 Bobber will be something to watch out for. Other than that, Hero MotoCorp will also be in focus as Hero XF3R, that's the company will be launching that in the month of March. That is expected with a price bracket of 1.6 to 1.8 lakhs. Like you can see that the premium motorcycle category is definitely picking up. We have seen that trend across in 2023, but 2024 is going to be really interesting because most of these launches are priced above that 1.5 lakhs and going higher up to 4 lakhs and even higher in some of the other categories. So two-wheelers are definitely on the roll, and most of these launches are much awaited ones.
Okay, point taken. Yes, a lot of these launches are much awaited, and so far the response has been really good. But take a look at the Nifty as well. Now, at the highest point of the trading session, very close to that 19,900 mark. The Bank Nifty 2 is up around 100 points, but it's underperforming as compared to the frontline index. Kunal, do you think this momentum is likely to continue, and then tomorrow we would see perhaps a 20,000 figure, if not on Thursday on expiry?
Yeah, I think hopefully on Thursday we should see that 20,000 mark for the index. Just another 100 points if we assumingly close at current levels for the indices, for the Nifty specifically. But again, the question remains is that the large cap stocks have still not made a very strong comeback. But then, this kind of a move on the index front is something which has been pending of sorts. And my sense is that if the premium for the next series, which is the December series, if they start to increase up higher, that could be a first indication that shorts have started to cover the positions and go into a long rollovers for the next series. I think that's going to be a more comfortable sign. So I've not seen that data as of now. Hopefully by the end of this week, the expiry that's on Thursday, we would probably get to see those signs. If that's the case, then we could be looking at a much stronger expiry as well as a start to the December series.
Deepak, for the market to push up higher, much unlike today where you've got the Adani group of names, OMCs, ONGC, etc. holding out, what do you think is going to lead the next move on the index?
Good question, Aisha. If I knew, I'd probably put all my money on it. But I mean, at this point, I think the financials are going to remain a little dicey. As in, they won't be leaders going forward. But we do expect some activity in terms of retail participation coming back, and driving more domestic oriented stocks, and largely I still think the mid caps and small caps continue to drive the rally upwards. There's a lot more money, that's domestic money, that's flowing into the markets. Foreign investors are actually not net positive. Last 3 months they've been net negative, I think, last 2 months or so. So I don't expect them to carry it forward. If they were coming in, the large caps would be the ones to rally. But I continue to think local domestic money that's coming into mid and small caps will continue to fuel it if it has to keep going ahead. From a sectoral perspective, of course, the month of December tends to really be positive simply because of the historical activities that December is one of the best months of the year. So I don't know which particular sector will probably drive it. But from January onwards, it will be results, I think, that will show us. And we'll know how good Diwali season is. And if Diwali was really good in terms of earnings, we should see the consumer durables or the staple sector kind of start to take more weight in the movements going forward.
Since we're talking about the seasonality factor, let me take it across to Vamakshi. She's been mapping how the previous few Decembers have been and whether the case is strong for a Santa Claus rally, which traditionally one has seen be the case, whether that's going to happen this time or not.
The month of December is almost upon us, and we've gone through data that pertains to the last 10 years, and we have some important takeaways that have come through. As you can see, in the month of December, generally small caps tend to be in favor. Now that can be evidenced with the hit rate that the small cap index has seen over the last 10 years. By hit rate, we essentially mean that it is the percentage of time that an index has managed to gain in the month of December over the last 10 years. So for example, when we say small cap index has a hit rate of almost 80%, we mean that the small cap index has managed to gain in the month of December in 8 out of the last 10 Decembers that we've seen. Moreover, when we talk about the sectoral indices, yes, we've seen that Nifty Metal, Nifty IT, Nifty FMCG are some of the names that have been in favor in the month of December with a nearly 70% hit rate for each of these indices. Apart from that, Nifty Auto and Nifty Bank have a hit rate of almost 60%, while we have the lowest hit rate of from PSU banks. They've managed to gain in only 4 out of the last 10 Decembers that we've seen so far. Apart from that, there are some certain stocks that have actually managed to give positive returns in every year in the month of December, and these stocks actually include counters like Elentis Beck India, Ahluwalia Contracts, Indoco Remedies as well as Jagran Prakashan, but there are also some counters that have given positive returns in nearly 9 out of the last 10 December, so they therefore have a hit rate of almost 90%, and these counters include UPL, Birla, Soft Tanla platforms as well as All Cargo. So all in all, these were all the trends for the month of December in terms of seasonality.
So much, Vamakshi, for telling us about the seasonality that we usually witness in the month of December. So bulls hopefully keeping their fingers crossed for the month of December. But let's take the BDST ideas as well from our chartist. Naresh, you go first.
Buy on Tata Power, good momentum here. Stop loss at 265, target price of 278. Second is a buy on Container Corporation of India, Concor. Finally, the breakout has happened and we've seen good follow-up above the 760 mark today. Looks like set up for a move much higher in the short to medium term. BTST target of 780, stop loss at 755.
Okay, in the meantime, you have the index finally hitting that 19,900 mark. For the longest time, we have been stuck in a range around 19,700 to 850 was the broad range that we were trading. But now we are finally breaking out of that 19,910 on the Nifty. Kunal, your view, index, BDST calls?
So, BTST calls, two buy calls. SAIL is the first stock which I would suggest as a buy, and I think metal stocks are making a strong comeback. SAIL is completing an inverted head and shoulder pattern on the hourly charts. This could be a possible strong up move candidate over the near term. So, would suggest a target of 98, stop loss at 88. And the second would be a buy on Parag Milk. Even this stock is heading towards a breakout. In fact, many of the dairy stocks have started to show signs of recovery as well as strong price action. So, would suggest a buy on Parag Milk, targets of 240, stop loss at 208.
Okay, with the index now at 19,900 mark, the last when this level was seen was back in September, 20th September to be precise. But Deepak, you know, since we've got a very near-term trigger, that's the state election verdict also, which is out on Sunday, we're going to react to Monday. The question is the market really going to react to that, or you think much of it is in the price?
Actually, I mean, I don't know so much about politics or whether it will affect the stock prices, but I don't think, you know, honestly, this country has been beyond, the economics has been beyond politics for the longest time. I don't think anybody's going to come and disrupt what somebody in the past has done, even if there's a change in government or something like that. So I don't think this is you know, so major, but then, you know, markets behave very differently, respond to news very differently. And in the past, we've seen politics cause, you know, a down circuit and an up circuit, but typically at the central elections or the parliamentary elections level. But, you know, whether this elections causes a major furor or change, I don't think it changes something fundamentally. With the caveat that, of course, if the left forms the government in many of these states, then there could be an issue, but because they have relatively more aggressive political, you know, thought processes. But I think beyond that, it shouldn't change anything economically. Any fall in the index, I think, should be welcome as a buying opportunity if it's purely on the politics.
Okay, if it's purely on the politics, use that as a buying opportunity. Deepak, before we let you go, what about the entire manufacturing and Make in India theme? All this, you know, Dixon, Amber, Sirma, SGS of the world, and now the trigger word seems to be semicon, because anybody who's getting into semiconductor is just seeing the stock rallying 15 to 20%.
Yeah, I mean, that's a little scary for me, because if you remember the .com boom, everybody started changing their names to .com. The stock prices would go up 10, 20%. And then, you know, so this kind of thing, now I think you'll find this in AI. Suddenly people will start talking about AI and their stock will go up. Semiconductors, their stock go. So these kind of things are not usually very good, because they indicate a lot of froth. Though the people who seem to have made the announcement right now seem to all be serious players. And a lot of companies, we own some of them that have actually started operations or are doing something in the space already. I think the whole Make in India theme itself has a lot more to come. We're in the early stages of manufacturing. In railways, India doesn't manufacture even, I think, more than 50% of the effective supply chain, although we're one of the densest, relatively more dense railway networks in the world. Across India, we have a fairly large reliance on passenger and freight travel on railways, and yet not much is manufactured here. So the Make in India theme, while they started it 2 years ago, I think the next decade is going to be huge on manufacturing, both high precision, and consumable parts of the manufacturing ecosystem. Largely business to business for now. I think eventually some of these will become brands as well. But I think the best is yet to come. We're very heavy on this, so very biased. But I really think I'm very positive that this will surge quite substantially in the future.
Okay, Deepa, good to have you in the show. We'll let you go on that note, closing in at 19,900 plus, a solid move of 114 points, and we're closing in at the session highs. It's really been the Adani names which have been hogging the limelight today. Adani Enterprises goes home with a 9% move. Adani Power holding up in excess of 5-odd%. Adani Ports looking pretty smart. The entire gamut has been very strong. There's been IndusInd up 4.5%, MCX which climbed up 6.5%, and then of course HPBP as well looked very smart. HP going home with an over 6% move for itself, and BPCL as well higher by 3.5%. Tata Motors, ONGC, Ultratech Cement, Bajaj Finance, Hero MotoCorp, Britannia, Axis Bank as well have participated in today's move, but that's not quite been the case with heavies like ICICI Bank, Reliance, ITC, L&T. They didn't quite participate in the Nifty move today. But that's pretty much it on this edition of Closing Trades. Thanks for watching.